Happy Sunday afternoon, everyone. Devils, friends of the devil, welcome to another edition of our Bitcoin Bull Bear series. If you guys have been following us for some time, you'll know that Sam and I have been alternating between Fridays when Sam provides a bull deep dive into the price action of Bitcoin. And if that video gets retweeted enough times by Saturday evening, then I'll come in typically on Sundays to provide a counterpoint, a bear perspective on Bitcoin price action. Just a reminder that this is really an exercise in awareness. It doesn't necessarily mean that either of us is taking our position that day or week. Rather, it's been our experience that the best traders, the ones who are most consistently profitable, are usually aware of both sides of the trade. And so we're doing our best to try to give you credible technical views on what might be happening to the upside and the downside. All right, so I've got Bitstamp here at the 1 hour, as you can see, and I also have BitMEX here at the 1 hour. And the reason why I'm showing two exchanges is because of this. On BitMEX and a bunch of other exchanges, I would say the majority, the new low for the correction got put in here. The first of these two pivots. On Bitstamp, you saw this last week, but just to reiterate, this is the new low. Now, Bitcoin is so liquid and Bitstamp such a reputable exchange that I personally have a lot of trouble. I find it impossible to ignore this data point. I don't care if it's the only exchange on the planet that this happened for. This is not one of those wicks that you see occasionally on a smaller coin that looks like, like this. And it's the only exchange that has one of these, right? Those you can ignore, generally speaking, after checking with other exchanges. But, I mean, to me, this is, it's just hard to ignore this price. But no matter what you do, you should be consistent. One of the characteristics of successful and consistently profitable traders is that whatever they do, they're consistent. It's a game of repetition and probabilities, and if you have a particular strategy or a particular decision that you make it all the time so that you're consistent in your application of it. And so I am consistently anal about this. If I find a new price extreme on a major exchange on a liquid coin, I count Elliott waves that take that into consideration and work for both this being the new low or this being the new low. So we're going to cover that a little bit later in the video, but what I first wanted to do was talk about some non-Elliott wave trading strategies that I've used successfully. And the reason why I'm doing that, as opposed to giving you the regular Elliott deep dive, is I gave it to you last week, and quite honestly, price hasn't really moved. I think this was the pivot. Maybe it was this one, but I think it was this one from last week. And if you recall, just very quick review, I had this as some kind of floor that was retracing to this price span of a lower degree 4, which was this. Right. So once again, as review, after an extended 3, the subsequent 4 tends to retrace to the price span of the 4 of the lower degree. So the 3's 4, which is this. Often to the price terminus, or this upper channel boundary. And as we were putting this pivot in, I said very specifically to expect price to move upwards. And here we are a week later, and, well, we're almost at the channel boundary. I wouldn't be surprised with one little move up here, and maybe even a little wick off of it, and then down. Now, in this particular situation, I do actually have a bearish view. I think this is going to break down, and the Elliott wave count is very, very difficult to make that point. I made it at a macro level last week, and all of this sideways stuff here that happened since then makes it even more difficult to gain conviction, partly because of this. Look at, well, for one thing, we've got this inconsistency between exchanges to deal with, this being the new low or not. But more importantly, look at the amount of overlap and the extreme wicks on practically every move. I mean, how do you count this with any kind of confidence? There's no way to count it in a high probability manner because it's a low probability situation. So we will put a count to it, rest assured. But before I did that, I wanted to explain to you a little bit of why I've been trading this quite actively. If you remember, you know that I did a trade alert last night. I shorted Bitcoin and took some profit, and I've been reshorting it every time it's moved up and created a wick for some nice scalps along the way. It's part of the reason why I'm a little late in my video today. So without having that kind of confidence in an Elliott wave count, because I think it's very hard to have that kind of confidence, why have I been doing that? Well, one of my preferred trade setups where I have just a very high hit rate on this particular trade setup is to look at horizontal parallel channels that are containing what looks to be corrective price action. Now, just because it looks corrective doesn't mean it's corrective. You could have diagonal structures that are very replete with zigzags and overlaps and things like that, and its motive. But when it looks like this, where price is moving up and down, and there's wicks all over the place, and it's just a big old mess, what I like to call sideways fuckery. Well, if it's sideways fuckery that's contained within a parallel channel that's horizontal, in which the median line of that parallel channel, like here, plays a significant geometrical role, I pay huge amounts of attention, because chances are that more often than not, when price breaks out of this channel, it's going to do so very, very aggressively. Let me give you some examples. I actually went back to the entire price record for the correction since the 20K high to try to illustrate this, and well, there's not that many places where this happened, what I'm about to talk about, because, well, for the beginning stages of the correction, the moves are so aggressive that there was really practically no sideways. I guess you could call this sideways, but this is not really what I'm talking about. I'm talking about tighter ranges than this. This is from 11 to 18K or 17K or something. Not what I'm talking about. Not even something like this. I'm talking about, where is this? Oh, auto. Okay, so I'm talking about, obviously, this. Even this is a little bit too much price range, actually. This is about $1,000 from top to bottom. I'm talking about stuff like this. Here. Certainly this here. But I specifically look for these setups because, as you can see, when they break out of their parallel channels, they do so with huge amounts of aggression and very quickly. So how do you analyze these things if you can't really easily put a confident Elliott count behind them? Well, generally speaking, when you have something that's traveling in a parallel channel, it's consolidating. Now, whether it's part of a corrective sequence or even the beginning of a motive sequence, which can still be consolidating, especially if it's a leading diag type of pattern, when there's consolidation and the consolidation is nearing completion, you tend to see divergence. And so one of the things I've been monitoring very closely is this. Let me just zoom out a bit. Sorry, zoom in again. You've got the standard Trade Devils oscillator package here with the Elliott wave oscillators. You got the RSI indicator, and we use something called CCIOBV, which won't apply to this analysis, but is a good measure of market depth and breadth. So very clearly, on this sequence, the one that's most important to us is everything from here on upwards, because it's the latest one, but it's also the one that is trending up, and it looks like it might break up, and it's butting right up against this upper channel boundary. Actually, before I talk about that, look at the significance of this channel median line, right? And we talk a lot about pitchfork median lines, but I also pay a lot of attention to channel median lines, especially when I'm analyzing this kind of horizontal price action. I will largely ignore channels where the median line isn't playing a key role. Now here, it couldn't be playing a more key role. It's separating the entire price action into three component parts very clearly, where the one on the left, it's acting as support. Now, look at how important that support was. Zooming back out here. Remember, this is a potentially an impulse from 10K down. And it came to a grinding halt right as it hit this median line. There's a wick, and then boom, right back up. And tested a few times, 1, 2 here, and then 3 here. And contained price right here between this upper channel boundary and this median line. And then it took this very aggressive move down to actually convert this support into resistance in this middle section. And then here, it took another very similarly aggressive move up, and not just one, but two, to cleanly break it out of this median line. So, is that median line significant? Yes. Therefore, this channel qualifies as one of my trade setups that I like. So aside from that, we were talking about divergence. You can see here clearly a series of lower highs, lower high, lower high, lower high. This one isn't really a lower high, but relative to this one, it's the same high. This one. And here, the corresponding price pivots are higher high, higher high, higher high. This low one is corresponds to this one, so it doesn't count. And then this higher high here. I mean, this is clearly bearish divergence, at least on the Elliott wave oscillator. Now on RSI, it's a little less pronounced, but it is going downwards. You can see here, this is the high. It's a little lower than that, and this one's a little lower than that even. It's going the opposite direction. Let me just draw that up so you can see it. Well, it's hard to do it here because it'll look flat. But even if it's flat and this is going up, that is still divergence. But here it's going up. Here it's clearly going down. Here's grinding down a little bit slowly. And importantly, there's no hidden divergence that I can see. What I mean by that is, so what's an example? Actually, there's an example here. You can see here from this pivot, this lower, this low, there's a higher low from this low here, right? Let me just make this, whoops. Let me make this green, just to differentiate it from the bearish divergence. This is hidden bullish divergence where this is going up while the corresponding RSI pivots are going down. See, this one and this one correspond. This is going up, this is going down. This is hidden bullish divergence within this bearish divergence. And so you did get this new high here right after it, right? But since then, we don't see that here in this price action here. We just see bearish divergence has been consistent throughout this entire move from here all the way to here. So that's significant and bearish with regards to this potentially breaking downwards. I also look at candlesticks, believe it or not. They're very simple, you know, kind of trading 101 analysis, but one of the things that I've found to be very consistently tradable is a sequence of candlestick bodies and their lengths that contracts sequentially. So this is big, medium, small, small, or even smaller than this even. So it looks like this. They have to be in sequence. You can't, can't fake the funk on this. You can't have one here and then the next one like 10 days later. But this is clearly all one move. And what this tells you about the trend is it's quickly decelerating and about to end. Often you will see a wedge shape being formed by these declining candlestick bar lengths. Okay. Actually, look at this. I just spotted another one. So here, it's the opposite. You've got very long, huge bullwick here, supporting price, causes this retrace, medium. And then, trust me, there is one here, but you can't see it because it's so small. See this tiny little red one right here? This is a clear sign of trend reversal and price deceleration, especially coupled with all these bullwicks. Bullwicks all over the place, see? Now, another thing that I find important is the ratio of the wick relative to the body that it's emanating from. And look at how big this wick is compared to this little candlestick body here, especially in relation to how big this was relative to this one. And this one had no wick. It was just so vicious down. So as the candlestick bodies get shorter and the wicks get longer, clear sign of trend reversal. And sure enough, there's a pause and a little reversal, then down more. But look at all these wicks, probably 7 or 8 or 9 or 10 consecutive wicks here to put this low in, but on a tiny little candle. And then, boom, explosion upwards, right? So that is one of the things I used to analyze these parallel moves. I've found it to be quite reliable, especially when combined with divergence. And we're butting up against this upper channel boundary that I warned you guys last week might be the end of what I called a possible 4, this thing. Or the B of the Y of a double zigzag also. If you recall, I had 2 counts on there. Now, let's look back at some of these highlighted sequences here. Just so you know, I'm not cherry picking this latest one down here. And again, I'm not saying this is bulletproof. There's no TA that is, but when you have stuff that looks like this in progress, it's very difficult in the moment until the sequence is complete to identify what exactly this is. In fact, even when it's over, it's hard to put a count on this thing. But it can certainly be channeled. You can do it wick to wick, or just wick it off. Doesn't matter. Either way, and if you wick it off, look at how cleanly the upper channel boundary acts as resistance 3 times. Once here, another time here, another time here, and then this one doesn't even make it and goes down, right? Does the median line play a significant role? Absolutely. Remember that this little ending diagonal was part of a vicious move from 10K, and this was a pretty aggressive move here. It might have been the sharpest move. Well, not the sharpest, but damn close. But certainly the longest since the 10K high. And it started to decelerate here on this ending diag. Well, if you knew nothing about Elliott wave and were looking at this ending diag here, what would you notice? Well, it's that wedge shape that I talked about. And once again, long, a little less long. Now, look at this. Huge wicks here. Huge, I mean, even bigger wicks here. medium, more wicks, medium, more wicks, small, more wicks. These are bull wicks, supportive wicks. Small again with by far the biggest wick from here. And as a percentage of the length of the body, by far the biggest, right? This is about as crystal clear a sign of trend reversal as you're going to get from candlesticks. And well, look at that. From up here, you get another wedge shape. Again, I'm not saying these are diags. This has nothing to do with Elliott wave theory. I'm just giving you another way to look at these parallel moves, these what I call sideways fuckery. I love sideways fuckery because often after sideways fuckery you get vicious moves down that if you can predict them with any kind of accuracy, then you can trade them. The other thing I like about this trade setup is it is a very high reward to risk ratio because the channel boundaries act as natural stop losses. Now you have to leave some room for wicks. So what I tend to do is I tend to look at the largest wick in a particular sequence I want to trade. So let's say I'm looking at this, right? And I'm looking to go long. And I start to maybe buy into it after this one because this is long, less long, medium, medium, and then it's small. I didn't know this was going to happen here. So I might have started my position here as I'm moving the channel down. And I'll take the longest wick, this one, and maybe give 50% more room, so about down to here, and I'll extend it beyond the lower channel boundary. And that's my stop loss. I won't let it go lower than that. But look at, the upside relative to how little risk you might be taking, right? And in reverse, long, medium, medium, small, tiny, right? What else do you see? Look at the wicks. Now here there's both bull and bear wicks, so there's a lot of fighting here, a lot of fighting, and then you get this big retrace. A lot of fighting here, a lot of fighting. But by the time this one gets put in, right, the wicks are starting to get very significant as a percentage of the bodies that they're emanating from. And especially this one, the wick is almost as long. Actually, might even be longer than the body it came from. And so here we have that trend reversal pattern in candlesticks that, whoops, I don't know what happened there. Sorry, my screen just... Okay, so here we have the opposite of what we just saw in the deceleration of the trend. Now this applies even without the channel. I know a lot of guys who trade candlesticks like this. I'm not a huge candlestick guy, but I pay a lot of attention to parallel channels that are horizontal because they tend to break aggressively in one direction. Some of them for traditional assets can be very frustrating because you can be in a parallel sideways horizontal channel for literally years. But in crypto, especially when you have a lot of leverage available to you and you can get a risk reward that looks like this, maybe, on this particular trade, I would have potentially started to short here or here, and quarter position here, quarter position here, quarter position here, and you take this longest wick, give it 50% more room, stop right here, and look at how much downside you might have captured. Right, and with these kinds of rewards that have very aggressive reward to risk, not rewards, these aggressive setups that have very aggressive reward to risk ratios that are, sometimes 10 to 1 or better, especially if you have a natural stop loss, I tend to go pretty big on leverage. I'm not a huge proponent of huge leverage, but these setups, and there's other setups that we share with members, like the triangle trade that we do, I go very big on leverage because I'm just not risking that much. even at, God forbid, 100x. Well, you might lose a meaningful amount that it hurts to lose, but look at you don't have to win many of those to be highly profitable on those trades. Look at how much move you would have captured, right? So anyway, I'm rambling, but one more. I'm telling you, this is a setup that I personally have used to good effect for over 10 years for sure, maybe 15 years. Here you have kind of something that looks like a triangle here. Now, while it's being put in, it's a little bit harder to peg what's going on, but by the second or third move, sharp move down, it should start becoming clearer to you that that there's trend reversal coming, right? For one thing, this huge series of candlestick bodies leads to a pretty big wick and all this corrective price action where there's pretty massive wicks here and here, and then once again here. And then the size of those retraces, I mean, this is a pretty substantial retrace, should be a clue, after a vicious move down. And then a little less big, still sharp, but not as sharp. Higher low from here, right? And this one's certainly smaller. So at this point, I'm paying a lot of attention, maybe even buying here with a stop at around here or maybe a little south of here. And then it reverses, but it comes back down, but not that much compared to this, this, and this. Now, what do we get here that we didn't have here and here? Well, we get this wick, and then another one, higher low. And then price is moving up here. And then we get one final move down, but I mean, really tiny. Another wick here, and then we get blast off, right? Now here's not here you also have, I guess, more of a triangle shape than a wedge shape, but the characteristic trend reversal geometry. So just a little non-Elliott thing that I've done, and back to here. This is looking to me a lot like the reversal is gonna go to the downside. Okay, so that out of the way, let's start thinking about our Elliott wave count in light of what's going to be just very, very difficult to count, I can tell you right now. So here we are, 15-minute, and I've kept it on Bitstamp to illustrate the point that whatever count I come up with must work with this being the bottom. Remember, I'm kind of anal about that, so I'm not just going to wick this off and call this the bottom. What structures work that have both this as the bottom and are valid, and this as the bottom and are valid? I can only come up with two situations where that can be okay. One of them is obviously that this is a 5-wave move down and it's an impulse, or I should say a motive wave. It's a diagonal structure that ends properly on Bitstamp and ends with a failure on most of the other exchanges. But given the small degree of truncation that would be allowed for it, it's certainly, I wouldn't call that so low probability, although it's usually most probable that you actually put in a real double bottom, or even a new bottom. In the scenario where the correction is ended here and all of a sudden we're impulsing up from here, or in a motive sequence up from here, then it's acceptable that this is the bottom in Bitstamp and a little higher than that to fail as a 5 that gets put in on other exchanges. What else? Well, you could have a retrace of, to me, what is a clear zigzag here if this is all still part of a corrective structure that involves a flat correction. Now, the guideline is that if the flat correction retraces, the B of the flat correction retraces more than, I think it was 105% or 110% or something like that. I want to say 105% of the A's origin, which this doesn't, then it can still be called a regular flat correction. But if it retraces a little bit more than that, 105 or 110 or whatever the guideline was, then it's an expanded flat correction, and it's allowed to retrace quite deeply, in fact. 130% or so is the guideline, but you sometimes have them 1618. So this being a new low is no problem at all if this is an A, and this is a B, and this is a C in progress. Now, there is another consideration that's corrective that has, again, not the highest probability, because if you're allowing for this to be the bottom or this to be the bottom, then you're trading off low probability or lower probability scenarios. But one other structure that I want to call out that's corrective is an expanded flat that starts here, where you have a zigzag here, A, B, C. Then you have a 5-wave impulse, very clear impulse down, 1, 2, 3, 4, 5, A of the B, zigzag A, B, C, and then this ending diagonal as the C of the B. That puts a proper low in Bitstamp, but fails slightly on most other exchanges. And then this would be the C. And the reason why I started thinking that way is the geometry of this A and this B relative to this C is not that pleasing to me. If we measure the length, it's not that out of the ordinary that it becomes highly unlikely. As you can see, it's hovering around 1618 of the A in height for this C leg. So whether it's done or it's got another slight push up before it's done, the length of it isn't that bothersome to me. It's certainly not the highest probability length, but in an expanded flat or in a regular flat, the C leg is often around 130% or so of the A, and we're not that far off that we're in super improbable land here. So to me, it's more the geometry, or this is a sharp slope, and it's very short in terms of time span. This is obviously more substantial, but then you've got this long and winding sideways C. And the personality of a C tends to be a little bit sharper in slope than the personality of the A. And here we have the opposite. So that bothers me more than this height. However, actually, let me start labeling some of this. If I'm talking about this being the A, this being the B, this being the C, right? Now, I'm just keeping this trend line here so you know what I'm talking about. One way to resolve this funky geometry is to make this the A, as I said. It's a zigzag, A, B, C. This then stays the B, but it's longer. It's got this nice clean impulse, a very clean zigzag, and then it's an ending diag. And then you've got this C. That resolves a lot of issues geometrically. It also allows for a little bit more room for the C to go up to clear the price high of the A, which, as I suggested last week, it's a very high probability bet that it will do so because of the strong guideline that 4s tend to retrace lower degree 4s. Well, if this is not a lower degree 4, but it's a 4 in and of itself, then you still apply that same trend line here as a test, because you'd want to see the C usually clear the price extreme of the A on the upside here for a flat correction or an expanded flat correction. Otherwise, this becomes what's called a running flat, which is a very low probability version of the flat, where you have an A, a B that retraces beyond the origin of the A, and then a C that fails to reach the price extreme of the A. That's certainly a possibility too, since we're talking about lower probability situations and this entire structure being so ugly. It is possible that this is a running flat and we've ended and it goes down. It's also possible that we have just an ugly flat that looks like this, A, B, and then this is a very sideways C, and it's in. So I just want to call this out for two reasons. One of them is this to me cleans up geometry quite a bit. Makes this probably my primary count now as this 4, given how sideways this has meandered since last week. But it also sets up the possibility that it's not a flat or an expanded flat, but rather that it's a running triangle. Got an A, B, C. Now the C hasn't cleared the A, so it qualifies. Go down for the D, up for the E, and then down for what must be a 5 if this is a triangle, since the triangle can only be in the 4 position of an impulse. Also, in the WXY scenario, this would create a triangle that would be the X, and then you'd have a 3-wave ABC zigzag down below it. So let me just zoom out so you remember what I'm talking about. See, it looks so big when I had it zoomed in the 15-minute, but now in the context of this, and if I expand more to the 2-hour in the context of this, is it really that substantial? Not really. Especially when you're counting this potentially as an impulse. We'd probably have to relabel things a little bit. I wouldn't call this the 1 and the 2 anymore, since this leg down that was the 5 of the proposed 3 is now taken up by the B. So I would probably have to be forced to call this a 1, a short 1, 2 here of the 1, 3, 4, and then the sharp move here is the 5. This would be, so this would be the 1, 2. This would be 1 of the 3, 2 of the 3, 3 of the 3, 4 of the 3, 5 of the 3 here, and this would be the 4. And then the 5 would go down. Now, you know, it doesn't channel as well as what we did last week, which I was very happy with. But again, we're in low probability territory now, so some of those considerations aren't as important as whether or not you break rules. And, you know, it actually works out from a measurement perspective quite well. If this is all the 1, it's kind of a sharp, long 5, so I don't love it. But if this is a flat correction, then or a triangle in progress, then this must be the 1, this must be the 2. Leaving room for a clean 5-wave count for the 3. 1, 2, 3, 4, 5, right? And look at that. The 1 off the 2 to project the 3 is almost 1618. So it's a pretty good measurement for this being a proposed 3 as well. This would be 4. And how much of a retrace would that be? Well, let's see. Off of this new pivot to this pivot, it would be almost textbook 382. Right? So moving this up 1 pivot to the left and creating this flat correction cleans things up geometrically quite a bit and makes this once again very likely. Let me get back to the 15-minute to measure this flat correction. Now the question is, well, doesn't this look too deep to be a B of an expanded flat relative to this A? And the answer is not too deep at all. Now, it may not be the 80% probability scenario, but let's see. I'm going to measure the length of this A back up to where the A started. And you've got a B that ends, once again, between 127 and 1618, right about the middle. So probably 135 to 145% or so of the A. That's very, very close to the guideline of 130% being the sweet spot for the retracement of the B relative to the A. And then you have a C in progress that, when complete, is likely going to be right here or a little bit over, which is, again, quite textbook. So I know a lot of folks were saying, well, you know, this motive sequence here certainly invalidates the bear case because this flat is too ugly and doesn't measure so well. Well, what about this one? Measures perfectly almost. Even allows for a little bit more room up, as I suggested in my prior candlestick analysis could likely happen before you get a vicious 5 down. Now, zooming back out, what if it's a double zigzag. Well, if this is what it is, which is a flat correction that's this size relative to this move, and or if it's a triangle that puts a D in here and an E here, then it's such a substantial correction that to me, then I would scrap the double zigzag and call this just an impulse. I'd have to adjust it so that this is the 1, this is the 2, 3, 4, 5, okay? And that would be the A of a zigzag. This would be the B, whether it's a flat or a triangle, whatever. And then you'd have another full 5 waves down. That should be equivalent by the guideline of equality to this move here in height all the way down here, which would take you down to 3-4 handle land, just like we said in last week's bear update. All very possible. So let's see if this is a clean 5-wave count. Well, I should qualify clean because given the amount of wicks and other crazy price action, I'm not sure that you're ever going to get super clean here, but there is a credible way to count this proposed C leg. Now, if it's a triangle being put in, this is ABC, ABC, this would be ABC somehow, right? So let's count it both as a 3-wave and as a 5-wave, just like we did last week with the broader 10K to 5.8K move. If this is an impulse, then, or a motive sequence, one of the key challenges is dealing with a light retracement here and all this overlap here. So as I look at this, again, I might favor this as a 3-wave corrective structure, and maybe the triangle option is the more likely one geometrically, just looking at this. But again, let's do it both ways. Let's look at this as a potential motive sequence. Well, to deal with this sideways stuff here, one obvious way to deal with it is if the sideways price action is in fact a sideways correction. And if you look at the trend lines at the top and the trend line at the bottom, you know where my head is. It's a very possible triangle. You've got there's 2 ways to count it potentially as a triangle. You've got an A, a B, a C, a D, and a short E, or it's a running triangle again, where you put an A, a B that goes above the origin of the A C, a D, and then an E here, and then you got a 1, 2, 3, 4, and probably one more leg up for a 5, right? Because I'm a fan of geometry, I like the running triangle better. It just measures, or I should say, the geometry counts cleaner than having this be a really short E, and this sideways action is just so nasty, and it's very likely the complex leg, and the triangles are allowed 1 complex leg. So I like the crystal clarity of this 3-wave move up, down, 3-wave move up, and then 3-wave move down here. I actually know this is a triangle because as some of the members know, I shorted this and announced that trade yesterday. It worked out quite nicely because it broke down as I expected. But you can see here, although through the wicks, it is a triangle, A, B, C. Right? So it's a simple zigzag, even though it has a really nasty triangular correction in the middle of it as the B. But what I'm talking about is this: A, B, C, D, and here will be the E. So it's a elegant solution to what otherwise would be an extremely funky and ugly count any other way if this is not a triangle. because you would have to deal with very significant amount of overlap and a lot of these wicks that are contracting in nature, and there's just even a diagonal wouldn't satisfy those requirements. So you'd probably have to fit a triangle in there somewhere to count this properly, one way or the other. But if that's a triangle, then this could be a 1, this could be a 2, this could be 1 of the 3, 2 of the 3, 3 of the 3, 4 of the 3, 5 of the 3. So 1, 2, all of this is 3, a triangle 4, which corrects a very substantial 3 relative to a tiny 1, 2. So geometry makes sense. And then you've got a 5 coming up. I guess you could count it so that all of this is the 1, 2. 1, 2, 3, 4, a little bit of a light, sharp 4, but 5 up here. That would be 1, this would be 2. And then you'd have something like a 1, 2, 3, 4, almost a double top 5 here for the 3. A shorter 3 than the 1, and then a very substantial 4, and then a 5 that's so far is certainly shorter than this 3, so that's also possible. Let's see, something like this. And then a 5 that's either in or likely in progress. So it's either this or, as I said, whoops, this also plays. Three, 4, 5. And notice the importance of this being the E right here. You can see if you move your eyeball to the 1 here. Actually, let me just mark it. That E does not overlap the 1. So there's no rule violation. See? Right to the tick. And it doesn't. This is how anal I am. So, if that wasn't a triangle, then you would have to count this as some kind of diagonal structure because of all this overlap, and certainly the 1 would be overlapped unless you count this as the 1, 2, which it's so small that I don't know that that's my preferred way to count it, but let's see. Now, if this is a zigzag or 3-wave corrective structure of some sort to put in what must be the A, B, C of a triangle, then this can't go up very much because this is where the A is, and the C in a contracting triangle can't breach the A, the A's price level, so it must be in. And so how would you count this to make a 3-wave like that? Well, a couple of ways to do it. One would be to keep this intact as a triangle and make that the B, and this would be a short C. I mean, certainly this is an impulse up here. It's hard to argue it isn't. And so you would then make the A leg quite substantial relative to the size of the C, which I don't love from a geometry perspective. It would be something like 1, 2, 3, 4, 5. So it would be like that. Let me just get this out, and actually you would have something like 1, 2, 3, 4, 5, all this the A, and then this would be the B, and then this would be a very short C. Alternatively, you could scrap this triangle and go back to this being the A. 1, 2, 3, 4, 5. Remember, we counted that as a possibility for the 1 of a potential impulse. Well, if it's a 5-wave sequence that could be a long 1, it could certainly just also be the A, right? And so you could have this be the A, this be the B, and then the C would be an ending diag. Now, it's not the cleanest count in the world, but it would look something like this. A, B, C1, A, B, C2, A, B, C3. The reason why I'm counting this very small one is because this is not a credible 5-wave move from here to here. It's very 3-wave to me. 1, 2, 3, right? So I would say 1, 2, and then all of this would be 1, 2, 3, 4, 5 for the C. It would be the double top or slightly above. And that would be the C coming up here, which can't breach this level. It's getting close. 1, 2, 3, 1, 1, 2, 3, 2, 1, 2, 3, 3, 1, 2, 3, 4, 1, 2, 3, 5. And in that scenario, the 3 would not be the shortest, as you can see. So that works as an ending diag C. If forced to pick, I would probably go with the flat, expanded flat A, B, and then C. Sorry, A, B, and then C, where it's unclear whether we have one more little push-up or not, but it doesn't matter. I think for the sake of probability, I would have it go a slight move up beyond the origin of the A, and then a very steep drop to complete a 5-wave sequence that is very likely the 5, or to initiate a zigzag correction A, B, C after this X gets put in. Now, I want to leave you with one little learning point. It's something that I learned myself relatively recently from a guy named Jeffrey Kennedy, who's one of the senior instructors at Elliott Wave International. I saw him do a webinar that I signed up for way back when, certainly many months ago now. And one of the things that he did, and he did it very quickly, almost like it wasn't significant, but to me that was the highlight of the entire webinar. I forgot what the webinar was on. I think it was commodities or something. But so he channeled a flat correction, an expanded flat correction. And I've always had trouble channeling expanded flats and flats with long C's in particular because they have such a weird geometry relative to other corrective patterns, right? So let me draw a classic flat. Looks like this, where the A and the C are the same length and meet right like this, right? This is a classic flat where all 3 legs are the same length. And obviously the way you would channel that is because it's basically a parallel structure. You would just draw a parallel line, or a parallel channel, right? Now, this doesn't work the majority of the times because typically a C isn't exactly the size of the A, or even you know, a hair above or hair below. Typically, you get something that looks like this, which is a C leg that's a little more substantial than the A. Sometimes even something that looks like this, where it's way beyond 1618. I've seen 2618 of the A before, and not just in small cap stocks, but we're talking, you know, Apple, Amazon, etc. In fact, you know, there's ways to count the Nasdaq correction, the crash of the 2000, as an expanded flat correction, where the C is a massive C. So it does happen. And so how do you channel this move? And the problem becomes even more complex when you got an expanded flat where the B goes down here and breaks the channel on the other direction. So to resolve this, the way that I saw him channeling this, and I loved it so much, I tried it probably 100 times or more since then, and it's actually reasonably accurate. Certainly better than a parallel channel. What he does is he takes the origin of the A and anchors it to the end of the 4 of the C. Remember, all C's must be 5 waves. So end of the 4 of the C, typically around here, this price level. And then he pulls it up to the A to project the ending of the C. And you often get something that hits the upper boundary line, or as I've observed last week, something that hits the median line, which is also a level that I've found is very significant with channels. So let's apply that to this proposed expanded flat to see what we get. And actually, this is the first time I'm doing this, so you're doing it real time with you guys. So again, just to relabel this proposed expanded flat, A, B, C, that probably has one more push up. Well, the way I would channel this, if I were to go with a triangle option, which is my favorite option if we're going to count this as an impulse or some kind of motive sequence. I guess if it's a triangle, it has to be an impulse, since you can't have a triangle and a diag. But if that's what's going on, then whether the pivot is 1, 2 here or 1, 2 here, it doesn't matter. You really, what you care about is this orthodox bottom of this triangle. So he would go origin of the A to the end of the 4 of the C, pull it up to the A. And what do we get? We get 2 taps of the median line to the tick, which leaves open the possibility that this is going to go up more and maybe end around here at, call it 7,100 or so. You know, if it ever does that, the bulls are going to be popping champagne, and the guys who follow us will be aware that that certainly could be the beginning of the up, but it could also be the beginning of the down and the bear scenario. Once again, awareness is key. So whether it's champagne or real pain, we're going to find out probably in a matter of a week or so. But I just want to open your eyes to the possibility that this is what might be happening here. In fact, given all of this price action since the last week's update, I would say this is probably my primary count on the bear side now. I'm expecting this to either end right here or with a slight move up here, or that it's going to move up some more and then come crashing down. All right, guys, so that's it for this week's bear update. I look forward to providing you another update next week.